What a fantastic Thursday afternoon it is. Welcome to the world of option addict trading. My name's Jeff Kohler. Of course, most of you know that. But what I'm doing is I'm trying to put forward a weekly watch list. Yes, I know it is coming out a little bit late. Normally this happens on Mondays and Tuesdays. And here we are on a Thursday. I recently got back from a investor conference down in Orlando. Had a great time there. Want to make sure I emphasize that. If you are thinking about potentially attending one of these in the future, we're doing this again in Chicago in August, and for the most part, most have recommended it was a pretty good trip. So, anyhow, I'm not going to be able to run through the full list in the 10-minute length of time that I normally try to shoot for. So if you want to see more potential trade setups, I'm going to refer you back to the blog where I'm going to follow up with a written post. And for those that don't have access to my trading blog, it is www.optionaddict.blogspot.com. And there we also posted some recent photos from the investor conference. So I'm starting off on a chart of the diamonds today, just to illustrate the recent pullback we've seen in the market and how it hasn't concerned me at all quite yet. In fact, what I'm really watching for to be concerned or to start taking more bearish trades is going to be simply just a violation of that support line, which I don't know if it's going to be substantial enough to break that. So we'll see how it turns out. But what you'll notice that I am going to throw up some bullish and bearish trades because I have some bulls out there and I have some bears out there, to tell you quite frankly. And it's a great way to diversify too, is taking some offsetting trades. It's going to be a good way to hedge your overall portfolio. So let's start off with a couple bullish trades. MU Core is going to be the first, which is ticker symbol BLUD. And what I see here simply is just a symmetrical triangle that's formed over a pretty recent period of time. And it does meet the minimum criteria of at least 2 lower highs and 2 higher lows. So we are right towards the apex of this triangle. So what I'm simply watching for is a break of support or resistance in either direction. Personally, I find that this works just as good of a continuation pattern as it does as a reversal pattern. So BLUD, what I like about this is it happens to be about 3 to 4 points wide. For a $30 stock that has relatively inexpensive options, that's going to be a good move no matter which direction it moves. So keep this on your watch list for a breakout. Next, I also have, in the land of symmetrical triangles, we have the Chicago Mercantile Exchange, which is actually something I am short as we speak. And the reason why is, let's see if I get these trend lines drawn up here. You can see we've popped outside of support on this particular trade. To me, it looks dynamic enough to hold. I like the volume that I've seen so far in the day. So I'm looking at a move to about the tune of 50 points, 50 to 40 points to the downside on CME. So this one happened to be a reversal. Like I say, symmetrical triangles aren't always continuation patterns. A lot of the times, if there's good volume there, they're going to work just as good as a reversal pattern. Rather than try to predict a direction, just wait for the stock to confirm which way it wants to go. Next, I'm going to look at a flag pattern on Advanced Auto Parts, ticker symbol AAP. And, this isn't the prettiest looking thing, but you can see the stock is wanting to trend up here a little bit. And we had a relatively good spike here recently. And we haven't quite confirmed this flag, but I like the fact that this one measures about, from high to low, a good 2.5 points or so. So for a $30 stock, we might see some good continuation, especially since a lot of the price action is happening above prior resistance levels. So keep that on your radar. Another flag pattern I'm watching is WCC, which is Wesco International. The most recent flag pattern we saw about a couple weeks ago has turned out pretty well. But we've also started to flag again within this trade. And I'm going to zoom in here just a little bit so you can see what's going on. But if I'm going to draw the flag, it's going to look something like that. And again, no breakout as of yet, but a break of resistance right in the $68 region is probably going to do it for me to take a trade here, as long as I see some good volume. What's also interesting is what you want to see happen in a pattern like this is you're going to see volume start to decline as well. It's actually usually a good sign because once volume is present, it's usually going to have a much better effect. So flag on WCC, have it on your radar. Another bearish trade would be in the home builder sector. Take a look at D.R. Horton. And what I'm seeing here, and you're going to see this a little bit on a lot of the home builders, they're starting to reverse a little bit. We've got a bit of a head and shoulders going on here on DHI. And you can see the first shoulder going on right here, the head taking place up here, last shoulder right here, and it's starting to break through that neckline. So this means for a stock like this, you're going to see about a 3.5 point reversal on DR Horton. And again, a lot of the home builders are showing this same setup. If you like that, don't take multiple trades on different home builders, but perhaps go to the ETF, go to XHB. Another Head & Shoulders, MCO. So again, we're seeing a couple reversals going on. This one on Moody's Corporation. Let's go first shoulder, head, second shoulder, and let's top that off with a neckline, which it broke through today on really good volume. I like the volume as it's been breaking through that neckline. Retreated from that last shoulder. Volume is really, really heavy to the downside here. Especially, notice how from the head back down to the neckline, notice how volume is really shifting from positive to negative. There's definitely a lot more negative volume in this than positive. So on a trade like this, you measure from the neckline up to the top of the head, which is going to be about a 5-point movement to the downside. And today it's down about $1.75. It's got a little bit more room to fall. So have Moody's on your radar. Getting back to some triangle formations, want to look at LOGI, Logitech, I guess. And we're looking something like this. Again, no breakout on this one yet, but I'm watching it. Depending on which way it wants to snap, either support or resistance, I'm looking at taking a trade on this guy. And, measuring from about as low as 27 or so up to about 30, about a 3-point movement in this one when it decides to move. So I'm watching this one as well. Another bear out there, Fairfax Financial. Now this one, I participated in some nice upward movement out of this guy. And then recently it's broken out of that upward trend. And what we're starting to do is we're holding at about 170. There's some support here. But at the same time, there's some falling resistance going on. And I don't have this trend line exactly perfect, but I think you can probably get what I'm showing you here. All right, so some lower highs, some equal lows, right about the realm of 170. I'm not too hot on this trade yet until it wants to break this support. So this might be later on into next week, especially if the market wants to start slowing down and turning bearish a little bit. Fairfax is something I'm probably going to participate in. Looking at this, you probably got at least a 15-point movement to the downside if it wants to break support. A couple others, not in the world of price patterns. I'm long Google, and I'm happy about that. But Google has a great channel going on here between about 510 and as low as about 555. So I got long Google when we confirm this bounce right up through here. And so far it's working out pretty good. Today's a nice indecisive day though, if you look at that candle pattern. And this also corresponds to, right about 50% of this channel, which happens to be a place where the stocks hesitated just a little bit. Not a lot, but a little. So if we turn down from this, I might take some short-term profits and maybe wait for a break above that to play a move to resistance. But for those of you who are not in this trade, use that same entry signal here as well. A break above about 480, 482 could mean some good move up to resistance. Another strong stock recently, Franklin Resources, Ben. Been watching for any reason to get into this trade, and this little pullback that we're seeing right now is probably going to be a good reason. So as soon as we get pretty close to this support level, I'd suggest maybe really considering some call options in a strong stock. Again, if it wants to break through support, we'll discard it, but if it wants to react there, it's a good action point. Last but not least, for all you bears out there, HOG, H-O-G. Yeah, I do have a descending triangle drawn, but I don't give it much credit because it falls at the top of an uptrend. What I am giving credit to here is good support at about 67.50. So if the stock wants to break below that, I'm not necessarily going to use the triangle here as a target price, but I am going to get long some puts on HOG, and we'll see how it goes from there. I'll probably just use that with a trailing ATR or something to allow it to run a little bit. So Addicts, that's what I got for you here today. We're just right about the 10-minute mark. I've got plenty of others I'm going to post on the blog today, mostly just some Momo stocks and some other patterns. But hopefully you'll take a look at those. You'll find some things of use. You'll add some things to your watch list. It's been a great week this week. I'm hoping that the trend is going to continue into next. If you guys have any questions, you have my email address, or please leave some comments on the blog. Again, I appreciate all your support and your participation, and we'll hopefully continue to speak to you throughout the week. Take care, everyone. Bye-bye.